So one of the questions I have is, you were in Australia earlier this year, and I'd love to hear a little bit more about your insights. But I think back to when I lived in Australia 10 years ago. And I remember all the way back then, Australia had already committed to becoming a mining center of excellence. You know, mining's contribution to Australia's GDP is about 15%. It's like 1% of ours, maybe on a good year. So it is such a significant ally in that way. What were your key takeaways from your trip to Australia?
So first of all, I love getting to Perth because it reminded me of my hometown of San Diego. There is no city in the world that has the same vibe that San Diego does more than Perth, in my experience. But also because of what you described, which is the centrality of mining and all the extractive industries in the Western Australia economy. Just doing the flight from Melbourne to Perth or Perth to Canberra, as I did, is a good lesson in the geography of Australia and how big Western Australia is, but also how much space there is. The tremendous potential, and it was so interesting to see the innovation that's happening, for instance, in electrification of mining operations in Western Australia, leveraging the region's enormous abundance of wind and solar resources. Hearing from Australian companies about some of the work they are doing to lower the above-ground footprint of their operations. Hearing about some of the innovation that's happening. I had the opportunity also to visit one of the universities in Perth, and you see there, I mean, again, mining is woven into the economy and the life of Western Australia as it is no place else in the world that I can think of. But lots and lots of innovation looking at how to build the volumes of energy minerals that we're going to need to meet our energy transition goals in the most sustainable way possible. It was also, as I talked about earlier, interesting to see all of the related innovation, to see what Rio Tinto is doing with their remote operations from their facility in Perth, far out into the countryside. And also to understand that Australia and Australian companies are not just active at home, but they are also global partners here in the United States and around the world. And I think that's one of the distinguishing aspects, especially of our critical minerals relationship. Australia, of course, was a founding member of the Minerals Security Partnership. And it was interesting for me to hear the back and forth between DQ and DFAT, because just like State Department, Department of Energy, we have different authorities. And with DQ looking at investments that can be made on domestic mineral supply chains, but DFAT looking at how they can leverage their foreign assistance authorities in other countries in Southeast Asia, where of course Australia plays a leading role, but also in Africa and elsewhere in the developing world. Exactly the same way my team at the State Department is trying to think about how we leverage our resources and our partnerships at the Export-Import Bank, the Development Finance Corporation, the Trade Development Agency, to mobilize the official resources that can catalyze private investment to drive the growth that we need in this sector.
You made a lot of good points there, so I'm going to start with the human capital, the education environment. Australia, if you look at the top 12 mine engineering programs in the world, Australia has 4 of them. A lot of our mining talent, technical management has started in Australia and been exported to the world. I look at one of our own American mining companies, Newmont, is run by an Australian, Tom Palmer. So how can we better collaborate to build human capital, which is not only a US shortage, but it's a global shortage in the mining industry? How can we strengthen that collaboration on the education front?
So first of all, we have to be smarter. And, you know, again, the experience of going to Perth was so helpful because it really puts a human face on a lot of this. And I think on my flight from, and I came in through Melbourne, and I think on my flight from Perth, I was probably one of the only people on that plane who wasn't carrying a hard hat on my backpack and, you know, with mining company uniforms, because you see how the industry itself is evolving, the use of technology to work smarter for remote operations. I talked about that earlier. The issues around electrification that I alluded to as well. We have exactly the same challenges here in the United States. In some ways, seeing how Australian mining companies operate, what it reminded me most of was Alaska, because we have the same challenges in Alaska, where there's a huge incentive to innovate because the cost of delivering a liter of diesel to a mining site or an extraction site on the North Slope is so high that that provides a huge incentive for looking really hard at both how you can work more efficiently, how you can work with fewer people on the work site, and how you can do as much as possible through renewable sources. So there's a lot of synergy that's going to happen there. And I think this also goes to the fundamental challenge that we face in the context of needing to massively scale the volumes of these energy minerals which we have available to us. We have to reduce the marginal cost. And that's going to happen, as you said, a lot of that work, the foundational work is going to happen at universities and research institutes, whether in Australia or at the Colorado School of Mines here in the US. But it's also going to happen because of companies that face the discipline of their shareholders and the discipline of quarterly financial results, which encourage them to figure out how to deliver the greatest possible value.
Absolutely. That cross-pollination of knowledge is just so important. You know, I was thinking, we were talking about rare earths earlier, which we know is like a central focus given the reliance on China for processing rare earths for 90%. You know, it's an Australian company who actually received the Defense Production Act company to build our rare earth separation facilities in the US, which will be the first in the hemisphere and one of the biggest outside of China. How do we continue to ensure that capital is moving in a way that maximizes outcomes?
So that's one of the things that we're committed to work on together through the U.S.-Australia Critical Minerals Task Force. We also need to figure out how we leverage other allies. So Australia, for instance, has been particularly successful in some of these processing sectors, also working with partners like Japan, leveraging the resources that Japan is able to mobilize through JOGMEC. And I think the ability to mobilize, especially in these industries like mining, which is unique in terms of the enormous upfront capex that's required to grow a facility, and the burden that that creates and the requirement that that creates for patient capital. And then figuring out how to avoid the temptation, the corporate temptation to say, well, we're just going to buy the cheap product from China because it's so darn expensive to create an alternative supply chain. There, in fact, is a hidden cost of energy insecurity, and we need to internalize that. Just as I think Europe has learned that the price tag of cheap Russian gas is not just what Gazprom charges, it's also the energy insecurity that comes with that dependence. And that's something that our two governments are talking about intensively. We're doing so in the face of challenges created by two moving targets. One is the head start that China enjoys, which gives China the ability to manipulate markets as it is doing today, for instance, with oversupply of lithium, but also the reality that future demand is going to far outstrip what we have today. So to take the example of lithium, you have a sector where there's current overproduction, which has created enormous political challenges, including in Australia, where, as you alluded to, you have several facilities that have gone into care and maintenance. You have the example of nickel, but also on lithium, but the same dynamic where you have facilities which are being held back by the current overproduction, where you look a few years out, the demand is going to be there. That's why I paid a lot of attention to Rio Tinto's announcement this week on Arcadium, where they are making a long-term bet that the demand is going to catch up with the current oversupply in a way that will pay off, and that is going to be an industry and a sector that is fundamental to long-term energy transition.
It's interesting. It's lithium, it's nickel, it's cobalt. I mean, I'm thinking about how America's only primary cobalt mine opened and closed last year,
right,
partially because Chinese companies in the Congo are producing so much cobalt.
Yeah.
So it's like a systemic challenge we have across the board. And again, what's hard is that the cost of doing business, if you're doing it right, is higher. So it puts companies that aren't doing it right at a disadvantage. Now, I think my final questions here is, I mean, you've been such an important role with the MSP, the Mineral Security Partnership. And Australia has been such a key part of the MSP. When I spend time in countries like Tanzania or Namibia, I mean, Australia is playing really actively in these spaces, and the US is playing quite actively and showing up and engaging in these markets as well. What has been the added benefit, and how can we strengthen our partnership working together with our Australian friends in emerging markets? Because it's going to be impossible to meet future need if I take China out of the calculus and to try to do it without our emerging markets.
Yeah. So first point I would make, I mean, one of Australia's great strengths as part of the MSP conversation is you don't have to tell anybody in Australia or in the Australian government why energy minerals are so important to the future. That's an assumed fact coming into the conversation. I think as we look to the future, the challenge is exactly what you described. We have to grow our domestic supplies. That's true in Australia. It's true in the United States. But we also have to significantly expand the opportunities for both extraction and processing globally. And we need to do so in a way that delivers value for the producer countries. I think this is another area where Australia has a very strong calling card, which is the ESG principles that its companies are committed to. Nobody worries that an Australian mining company is going to cut corners on environmental or worker rights issues because it faces the scrutiny of its shareholders and its regulators at home. So we've got to figure out how do we market that aspect to demonstrate, as my boss, Secretary Blinken, likes to say, that we are delivering a better offer, especially to the producer countries in the developing world. In this regard, I think we're at a moment of tremendous opportunity because across the board, what I hear is a desire to find an alternative to the traditional model in this sector, and to do so in a way that is perceived in the developing world as equitable, as ensuring that the producer countries see the benefits of their resources, as they should expect, and that there are investments made in human capital formation, in infrastructure, in order to guarantee that governments are able to demonstrate to their citizens that there is a reward for pulling out the commodities of their earth, but in a way that is sustainable and delivers net benefit for the societies. So I think there's a very strong alignment between the U.S. and Australia on these issues. There's obviously a very, very strong political commitment in both Washington and in Canberra to being seen to be working together, and that's the advantage of working with a longtime ally like Australia, is everybody's very comfortable with each other. You could argue, both you and I are here in Washington, where you could argue Australia may have the best brand of any country in the world in the United States right now. I've never met anybody who doesn't have good feelings about Australia and our Australian allies. So we got to figure out how we leverage that into these critical sets of issues where there's a very strong political alignment in terms of the destination that we want to reach.
You made some great points, and I think there's three key takeaways I take from this conversation. One is that partnership is really important to increase investment in the U.S., to increase investments in Australia and in emerging markets, but in a way that we can create a resilient mine to manufactured supply chain. Sometimes we have a tendency to talk about just the minerals or just the processing or just the manufacturing, but one of Australia's key advantages for us as the United States here in Washington is they've had a decades-long advantage in building processing capacity, inputs like machinery, helping us get to our manufactured goods that we need for national economic and energy security. Assistant Secretary Pyatt, thank you so much for joining us today. Thank you all for letting us be a part of your event from many, many thousand miles away.